Hey, good morning, traders. Today is Friday morning, July 14th, approximately 10:30 Eastern Standard Time, just 1 hour after the markets have opened. And we have lots of news to talk about this week. First of all, that inflation rate here in the U.S. has come down below 3%, within range of the Fed's stated target of 2%. The VIX remains at all-time two-year lows. We have the dollar breaking a significant support trend line, which we will talk about in just a minute. And our stocks look to be performing that blow-off top that I've been speaking about for quite some time now. Let's just jump right into the charts here. I'm going to split these videos up, guys. This video will be a series about the overall macroeconomic picture here in the U.S. at least, what it looks like and where we're going. And in the next video, I'll talk more about crypto. We're starting here with the dollar because that leads the way. And you can see I have been talking about this head and shoulders pattern for quite some time. In fact, before the right shoulder ever formed, I anticipated we might be forming a head and shoulders pattern here. And sure enough, this looks to be a patent head and shoulders pattern. Now you do have a couple humps here. That's okay. Sometimes that happens on shoulders as long as the latter hump has a peak that is lower than the prior hump. It still is a valid head and shoulders pattern, and that is the case here. So this neckline comes all the way from 1984. We resided under this descending trend line since 1984 until recently in April of last year we broke above it. The dollar became very strong, and that is when we started to form this head and shoulders pattern. You can see the left shoulder was formed here, the head up here, and we have two right shoulders. Now, what I didn't anticipate here, guys, was a break straight down below this neckline, which is very strong support. You know from the last video, I thought we might bounce a little bit here before we take another stab at it and eventually break down. But the market decided to break straight through. And I suppose a lot of that was due to the news regarding our inflation rate. So let's just jump over to that chart. And you can see the latest numbers. Now this is going to go to the monthly, was that our inflation rate is now at 2.97%. The market takes this as hugely bullish because I remember the Fed's targeted, or the stated target was 2%. So it looks like we're well on our way to that 2%. Therefore, the market is anticipating further Fed rate pauses, if not eventually in the future, a reversal. Now, why would the Fed reverse their pause and not only just pause, but reverse and start lowering rates in the future? Well, that has to do with the unemployment rate mainly, in my opinion. The unemployment rate remains low, range bound between 3.5 and 3.8%, and it is actually the goal of the Federal Reserve to raise that unemployment rate a little bit. Why do they want to do that? They have to do that to get the monetary system to work the way it is actually designed to work, which is to keep people dependent on the system. You need a certain number of people dependent on the system, which has to do with unemployment, to get this monetary, all the levers and all the buttons have to be pushed just right. The inflation rate has to be just where the Fed wants it, etc., for it to be designed to work the way it does and to keep not only the masses happy, but the those that control the levers making the money and keeping the economy stimulated and going. You can see here I have bullish divergence in the unemployment rate denoted here on the RSI, which signifies or indicates that the unemployment rate could spike considerably in the future. Now, if this unemployment rate goes up as I expect it to do, it could be, if we look over here at the inflation rate, that the Fed has tightened too quickly and too much in that amount of time, and we break straight below their target and go way down here, which would indicate future recession, possibly depression. I don't expect the latter, but I expect at least the first, but not before we conduct our blow-off top, which I have been preaching about for the last year. You guys know this that have followed me. So I'm going to jump over to the SPY chart here, and we'll put it in daily mode and show you what I'm looking at. All right, so with the dollar breaking below that support, indicating that the dollar has further down to go, and we can do a quick measurement of where that target is by getting a line here going from the top of the head to the neckline. And then we're going to drag this rough estimate to the break of our neckline. That'll show us the target down here for the US dollar, which appears to be right around 80, I would say 85 to 86. All right. So eventually we will go ahead and break through all of this, which is going to be significant support. We could bounce here, go back, kiss the neckline one more time before breaking through all of that and coming down here in the future. This is not going to happen overnight, guys. This is going to be a process that lasts anywhere from 6 months to a year and a half. Could be as much as a year and a half. I would anticipate 9 months to 12 months would be a good ballpark. Remember, this head and shoulders pattern that we have drawn here, this took us a year and a half to form. So why wouldn't it take us another year and a half to get to our target? It could. But generally, once you break that neckline, the process of price action to reach the target occurs a little bit quicker than the process it took to make the head and shoulders pattern. Anyways, with the dollar getting weaker, remember it takes more dollars to buy a thing, whether it be bread or eggs in the grocery store or stocks. So the number of dollars that it takes to buy a thing has to be factored into the market as well. And that is why this is good news, or perceived good news, for the market. You can see I have a question mark. Breakout confirmed. Now, why did I put question mark? Because we essentially have two lines here, trend lines, ascending trend lines, which form the top of this channel. One is from the wick ups and one is from the bodies. Now, I like to form the top of the trend line from the bodies. I like to think of it this way. The body is stronger than the wick up, the stick that it forms on top of it or below it. And so I like to form my trend lines there. However, I know a lot of the collective form their trend lines on the top of the wicks. You don't get as many touches often that way, but nevertheless, it is something we have to consider. So I said breakout confirmed because we closed right on my the top of my channel, and I wasn't sure, is that a close above or below? It's too close to call at that point. So we needed another candle to open and close. Actually, we needed 2 more candles to open and close. The candle today is very significant. All right. So if we close above this black line, I'm going to say yes, breakout confirmed, blow off top on our way. And when this blow off top occurs, the target shall be anywhere from 550 to 600 on the SPY, which is about 5,500, or 6,000 on the S&P 500. Yes, that is how high we could go before this ends, breaking previous highs and forming all-time new highs on the U.S. stock market. Many people don't believe this will occur, but guys, if the dollar is breaking, which it is, and growing weaker and weaker every day, which it is, and possibly going to new local lows, which it could be doing, that has to be factored into the prices, all right? And the market will do that, all right? So we will experience this blow off top. Okay, so now we want to talk about how that actually affects crypto. I'm going to jump over to another list here. This is my next trade list. I have a little bit more data here being recorded. We're going to talk about Bitcoin and how that affects the price of Bitcoin. Of course, again, it takes more dollars to buy. I realize there is a war of sorts going on against crypto and the crypto industry. And now we have BlackRock in the mix, big money in the mix. All right. So some people support that idea, think it's positive for the market. There's other people that think that's negative, more manipulation will occur, and that very well could be the case as well. Either way, we look at the broader U.S. markets and what's going on with the dollar and inflation, etc., because that does spill over into our crypto space. Generally, if the dollar is weaker, we have stronger support for finite assets. In this case, it's a digital asset like Bitcoin. Only 21 million coins are ever going to be in existence. And so the value of Bitcoin, perceived value, goes up. It goes up because the dollar is going down. And in fact, all fiat currency around the world it continues to degrade in value. All right, so right now with Bitcoin, very quickly, we are in this range. We are range bound between 31,621 and this slightly declining trend line, or you could go with the green support. That's also support at 29,940. And in my opinion, this is a good thing. However, it's not as bullish as it could be. Why do I say that? Okay, so we have a cup and handle pattern here. See the pink line? That has been validated. All right, so we broke above it. We went really high, really fast. Came back down, classic retest of this previous cup and handle neckline, did not break below it, and bounced from that and went back up. But on a larger scale, let me see if I can clear this chart up real quickly for you so you can see this. Okay, so I've just cleared all the drawings, and what I want you to see here is another either inverse head and shoulders, or you could just say cup and handle. This would be in the cup. All right, and this being the handle. Is that really right? Let me just do one thing here, make one modification. Okay, so what I did is I dragged the neckline down just a bit because it didn't look exactly right. We needed a touch over here in this area, and previously I did not have that touched. Now I do. All right, so where we're sitting today is just above this neckline, but we have not confirmed a break above this particular neckline yet. We have to watch very closely. This closed today. If we can close above 31,077, 31,000, let's say we close above 31,000 today, you can start to confirm this break. I like to see 3 candles closing above a significant trend line. In crypto, that's because crypto never closes. And so really we want to see a close above it today and an open and close above it tomorrow as well. And that confirms yet another cup and handle pattern, meaning we will go even higher into the future here. But if we don't break and confirm, that invalidates this particular cup and handle pattern. All right, bringing all my drawings up again. So it's very important to watch that 31,000 level. We have to close above 31,000 today and open and close above it tomorrow before I really feel confident for that second cup and handle pattern to play out. For now, though, we still have the first one playing out, and the target of which has not yet been reached. The target here I have between 35 and 37,000. So again, we can still expect at least that cup and handle target. Okay, what else do I want to talk about here today? Let's look at Bitcoin dominance real quick. Has come below a significant descending trend line. That is pretty significant, telling us that altcoins are due for a little bit of a run here, which they are taking. And that on the news of XRP. Of course, we know the ruling yesterday, I believe it was. The judge ruled that XRP or Ripple was not a security. That's huge for the crypto world, especially altcoins. And we'll talk more about that in the next video. But I wanted to skim briefly these charts because we're looking at the macro picture right now, especially as it pertains to crypto, stocks and crypto. And so let's go to the Ethereum BTC chart. This is what tells me that altcoins will be on a run. If we see a breakout of this particular descending triangle, it would be hugely bullish. Now, we had one breakout already, but that was a false flag, all right? And we hit that 200-day, and then we had this news. Again, lots of black swan events in the crypto world. We started with Luna, and then we had FTX and exchanges failing, and then SEC suing Coinbase and Binance. It really never ends. These are events that us smaller people can't predict. Big money somehow always knows, but we don't know. So we have to look at these charts for clues. And sometimes even the charts fail us because they show a breakout and it's just not a lot of the collective is aware. If we had more of the collective aware of what the news actually was and not just the elites, these charts would be more accurate. But for the most part, they do us justice, all right? It never fails to amaze me how accurate charting can be. I'm looking right now at DeFi, and what I'm going to go into in the next video is this June 23rd date. That was the date that the news was announced. SEC would be suing Binance and Coinbase, and you can see on the DeFi chart we have beat that high from June 23rd. That is significant. We'll talk about that in the next video. But if we go to other charts, that June 23rd date has not been beat. Let's see if I can, some of these altcoins, for instance. All right, so Doji is right on. So here's the June 23rd candle, and Doji right now is testing that high. And so you'll see a lot of the mid to lower cap altcoins still testing that level, that high from June 23rd, which got smashed with the news of the SEC lawsuit. And we're going to go through that in the next video. One more thing I just wanted to quickly show you. Actually, a couple more things here. We'll take a look at the total chart. Totals is looking good. I would be more comfortable with alts once we beat this level up here, this descending light blue trend line. Once we beat that, then I'm more comfortable in alts. Right now, what I'm most comfortable in is DeFi, and I just pulled up that chart, and you can see that DeFi has shattered the June 23rd high, which is significant. But if we take a look at other altcoins which are not in the DeFi category, like we just did with Doji, they're still struggling to beat that June 23rd high. All right, Ethereum, on the other hand, which was not included in the SEC scope, has formed an inverse cup and handle pattern. We're looking to confirm that today. If we confirm that, my target still remains 23.13. Remember, I got into this trade early. I got into it at the touch of the 50-day or somewhere around there, assuming that this inverse head and shoulders pattern would play out, and it looks like it is. So lots of things happening in the crypto world. If you want to stay tuned and watch my next video, I'll talk more about that. All right, until the next video, guys, I hope you have a great week and happy trading. Feel free always to comment, ask me questions, especially on my site there, studom.us. I read all of those comments. I don't necessarily read all the comments elsewhere. But until the next video, guys, peace, y'all.